Good to have you with me on Simplified with me, Tanvi Shukla. We're going to talk about one of the biggest news of this week. In fact, this week started with so much excitement in the stock markets, on the Dalal Street, within the banking sector, within the media circles, as the announcement of HDFC merger with HDFC Bank came out, and much to the surprise of many, actually, in hindsight, everybody's saying, well, this makes sense, it's beneficial for both of those entities. But I'm not going to go into the details of how will it work on the balance sheets of HDFC Limited or HDFC Bank, or how will it benefit the investors, the shareholders. Much about that has already been said and discussed. What we want to do here is talk about how does it benefit you as a customer. And not just this merger, but in general, in the recent past, we've seen a slew of mergers in the public bank sector, in the private bank sector. Many are expecting a lot more to actually happen, at least in the private banking sector. And there is often, this entire narrative that is put across saying, well, India needs fewer banks, but bigger, better banks. What does that really mean for you as a customer? Does it mean that the services get better? Does it mean that you get cheaper loans or you get your loans easily? Does it mean that your money in the banks is protected better if it's in a big bank? How does having a big bank really benefit you, the customer? That's the answer that we're trying to find here as we simplify this news and in general the overall set of mergers that we've seen in the banking sector. And to help us understand this, let me say hello to Hemindra Hazari, an independent banking analyst, very vocal about his views when it comes to this sector and the economy as well, joining me right now. Mr. Hazari, let's just first start with this big news, the merger between HDFC and HDFC Bank. To you, how does that make sense? How would we explain it to an HDFC bank account holder or a borrower?
For an HDFC bank account holder, it will not make such a major difference because even earlier, the HDFC bank staff were marketing HDFC mortgage loans to them. The only difference it will make is that earlier the loan used to then reside with HDFC. Now the loan will reside with the bank, and it was then serviced by HDFC. So here really from their angle, I don't think it can make such a big difference for an HDFC bank customer because earlier the product was offered to them. If they took it, then the HDFC, the parent, used to do the loan appraisal, and then they may share that deposit, the loan with the bank at some later date. But from the HDFC bank customer, as I said, there should not be such a major difference now.
Okay, so as a borrower or an account holder and a depositor, what would be, is there any benefit of having a big bank? Does it help me or protect my money or help me grow my money in any better way?
See, even before this prospective merger, HDFC Bank was a very large bank in the Indian banking market. And therefore, by making it bigger than what it is not going to make such a major difference to the HDFC Bank customer. And added, what I think one also must realize is there may be added cost for the bank on this transaction because the loan portfolio and the liability portfolio of the parent HDFC will be subject now to cash reserve ratio and statutory liquidity ratio requirements, which means that there will be an added cost to the HDFC Bank. Now, either the bank can bear the cost and therefore the shareholders will take a hit. But from what we have seen globally as well as in India, shareholders don't like to take such hits. So it is passed on to customers either very transparently in a higher price or the higher rate of interest on the loan, or more likely in some hidden charge will come about, which will be paid to customers. Now here it's not just the housing loan customer which will pay it, but it may be, non-transparently put on all the HDFC Bank customers, in which case it will not be such a positive sign at all for HDFC Bank customers.
Interesting that you point that out, and something that we will have to watch out for. But let's take a step back and look at the larger setup. And as we look at the Indian banking sector, I just want to do a quick recap for our viewers also on how has the journey been, post independence. First we went to the entire era of nationalization of banks, and that was really the first set of steps that the government took, and between 1961 and 1969 we actually saw an entire move to nationalize the private banks. So there were a large number of private smaller entities which existed at that time, and the government privatized 14 of these private banks. In this era and a little before that, about 46 different mergers took place. Then came the era of 1969 to 1991, where again there was more nationalization of private banks. 6 of the big private banks were nationalized at this point. There were 13 other different mergers that actually took place to consolidate the space, and this overall era was about nationalization. But that then changed starting 1991. From 1991 to 2015, we saw about 22 more mergers take place in the banking sector, and largely these mergers were about saving the weaker banks or helping the weaker banks improve by merging them with a bigger, stronger bank which had good business going. It was also about enabling more growth, creating entities which would then be able to reach out to more people, to lend to more people in a better, safer way. In 2008 and 2010, the same period, we actually saw the first round of big mergers take place with the State Bank of India. So smaller state-owned banks were merged with SBI, and that was one of the key rounds that we saw in the recent times. Of course, one of the biggest has been, which has been in works for quite a while now, and actually was announced and finalized in 2019-2020, the mega merger of banks that is called, where the government actually took about 10 public sector banks and decided to merge them to create these 4 large entities. So there has been much consolidation, and a lot of that process is still on when you talk about the public sector banks. So the idea really is to create stronger banks which are also bigger in nature. In fact, Mr. Hazari, Arun Jaitley, when he was the finance minister a few years ago, he actually made this comment that caught everybody's attention, and this has largely been the view of many experts as well, which is to say that India needs fewer and mega banks which are strong in every sense, from borrowing rates to optimum utilization. The economies of scale as far as banking sector is concerned are of great help. Do you agree that bigger banks is something that our country requires and will be beneficial for everybody?
I do not subscribe to that view. Mind you, this was the view even in the earlier government put forth by Mr. Chidambaram. Somehow they believe that bigger is better and bigger is more efficient. I do not subscribe to the view, because essentially we have to see whether the customer is getting benefited or not when there are number of banks or whether there are fewer banks. Whether the banks are penetrating the Indian hinterland where banking services and financial services have not yet reached some of the areas. So in my view, you don't necessarily have to have fewer banks to achieve these objectives. In fact, indeed, if you have fewer banks, you may have a situation where there is less competition. And with less competition, again, the customer gets taken for a ride because then the fewer banks control the market. We have seen this in various sectors in the Indian economy. And our competition commission is very selective in the cases it takes for its ruling. So fewer and bigger, in my view, is not necessarily better for the customer.
Not necessarily better for the customer. Then apart from the banks itself, who does it help? Is it more about perception to say, okay, one of India's banks or 2 of India's banks become a part of the top 10 or top 20 global banks? It's more about that kind of a global perception than anything else?
Obviously, in this market, everything is about perception and valuation, as we have seen in a lot of the IPOs that we have seen.
Right.
It is how to market it. And somehow, I think people, and the government of the day feels very proud if one of its banks or a couple of its banks make it to the top 50. But again, to me, that's just a number. Finally, are you achieving those objectives that you are seeking? because banking is a strategic industry. The profit motive for shareholders is not the only objective in a bank, because it serves a much wider community. The depositors have a much larger stake in the bank than the equity shareholders, and therefore has to be beneficial to all sections of society. So therefore, in my view, I think the government now has rushed into this consolidation of PSU banks, now that it is a done deal. But in my view, it has really set them back a year or two.
What also happens is when you try and merge these banks together, and I'm not talking about one specific example, but since you also mentioned the public sector bank mergers that we have been seeing, if the culture and the environment doesn't come together, if the emotional quotient isn't looked at by either of the private or the public entity, then there is a threat, Mr. Hazari, that the customer actually becomes the one who loses, who's at the losing end of this, because the service is something that will get hit the most. And I see it everywhere. People that we speak with, viewers who write to us about even the issues, banking service specific issues that plague them. From the biggest to the smallest bank, it's that customer emotional question that seems to be missing. Now, how do we fix that problem? Because surely for any bank to be really successful in the long run, you need to think about your customer.
See, all this is very theoretical. In the long run, everyone really plans for the short term, because the CEOs there for the 5 years or about 8 years, they all think in those 5-8 years, what is the quickest way possible of delivering returns to shareholders. So although all of us preach and like to believe we are there for the long term, in effect, a lot of the business and management strategies that are put in place is all for the short term. Because please note that in the stock market, and if you are listed, every entity is struggling to report numbers which satisfy investors every quarter. So actually, you only have a quarter. Like, how am I going to show the numbers that the stock market wants for the next quarter? So it's a very quarter-oriented approach. And all this long run is, I think, only meant for intellectual discussions, because otherwise it's all in the short term that the managements really look at.
But so, for example, let's say that once a bank achieves a certain scale, they have access to enough capital to invest in service and technology. More importantly, technology now. HDFC itself saw the wrath of RBI a couple of years ago when it was asked to stop issuing newer credit cards until they fix their back-end technology. There was a lot of problems that users were facing. And only now, recently, that ban was actually lifted by the Reserve Bank of India. Can one not expect that investment in technology is something that a bank understands will benefit the customer, the shareholder, and the investor?
Again, theoretically, what you are saying is correct. And this is what they all publicly state. But let us look at the example of HDFC Bank. I mean, customers were totally stranded for days on end. Now, can you imagine if HDFC Bank had acquired some other bank and become even bigger, and they had this problem? That means the problem would have even had a more adverse impact on the entire economy, because it is such a large player. So again, you see, the size is not the all-important number that one has to look at, or the indicator. Now, second, as I told you earlier, ideally they should have made investments. They all preach about that. But in effect, what actually happens is institutions and banks, they underinvest. Because if you are to invest more, the costs may rise, because there's an investment in technology which gets depreciated very quickly. So everyone tries to make minimal investments to get maximum revenue. And this was a case in HDFC Bank of very clearly underinvesting in technology, till finally the regulator, the Reserve Bank of India, cracked down very severely on HDFC Bank. So this, unfortunately, is what happens. People don't like to invest in infrastructure, believing that it will save on costs in the short term. It's a very short-term kind of approach. Because, as I said, the costs would increase shortly, while the revenue would come in later. And only now, when the regulator intervenes and slams them, then only do they realize that the mistake has been made, and the customers have the grievances shoot up.
Okay. One other aspect that I wanted to talk to you about is, when the argument is made that big banks bring about the economies of scale, they bring about further security as well, and in a sense provide more immunity to these banks from running into trouble. But do you agree with that? Is that true? Because if a big bank actually fails, that perhaps has a bigger impact on the economy and the entire sector than anything else, and we've seen that in the West as well.
Most definitely, because the bigger you get, the greater danger you will pose to the economy if you fail. And we saw that, post Lehman, that all the big financial institutions in the West got impacted. And that is because they were allowed to merge and become, monstrosity institutions. So you have to be very careful. Big does not, as I keep saying, big does not necessarily being better. And therefore, one always has to see, because everyone preaches of top quality governance, top quality technology investments. But having studied the sector for so many years, I realize a lot of it is a mirage.
A lot of it is a mirage. Thank you for that reality check. A pleasure to have you and have a conversation with you as always, Mr. Hazari. Thank you so much for joining us. So there you go, one of the biggest experts of the banking sector who's tracked it very closely, and like I said, extremely vocal about his views about every development here, cautioning you and me that bigger banks don't necessarily mean good news for the customers. They could mean all kinds of news for the investor, for the shareholder, but at the end of the day, as a customer, your life may not necessarily change with all of these mergers that are taking place. It only depends on how the management of that bank views you and treats you. Now, the HDFC Bank in this case, for example, says it is also good and it's the best news for their consumer as well. It remains to be seen if that actually takes place. One could though expect that because of this now, one giant merging with another, creating another behemoth, it may put pressure on several other private sector banks to also find ways to scale up, including merging with other banks or acquiring other smaller entities as well. And that's what we need to look out for. But at the end of the day, if all of this churn doesn't benefit us, then one must ask the question, how do we ensure that the customer service and the quality of helping you protect your money and grow your money improves in the Indian banking sector? Thank you for joining us on this edition of Simplified with me, Tanvi Shukla.